analysis, as I told you, that I will do it later and will share with you the ratios. And I have given you the assignment that you could do it yourself as well. If you look at the revenues, you would see that for the cup car, the revenues are increasing. Cost of revenues also increasing. Um, I think there is again here I need to adjust it because these were the slides. I yet to work on it, so I will share that analysis with you. So um, we will see like here some of the important the ratios that needs to be calculated. As I told you, debt and equity ratio is one of the most favorite ratio that you might have to use it for. Like while writing the answer on financing, right? So we will do that and some of the other ratios. And generally, you need to have an idea that your profits are increasing or decreasing, your revenues are increasing or decreasing. For instance, that the finance cost is the same for 2021 and 2022, so which tells us that you are probably not increasing your, you are not increasing the financing, you are maintaining the current the ratio of the debt to equity. If there is any requirement that might being met from the other sources but not from the debt financing, that's why your interest payment or the finance cost is same. So every ratio tells us something, so we actually need to understand that the that information that is being that you can interpret from the ratio. It's not like that just knowing the number is important. It's important that what's behind that number. So that if a financing cost is same both year, it means that probably you are not raising any new loan. Uh, okay, so I have just explained it. It's just a revision of those concepts that you have already studied about the sensitivity and scenario analysis. I am keeping it here just to because I could not find any other reasonable, the part of your pre-scene where we can refer, we can put it like that. One was the profitability and the revenues, the portion of your pre-scene where we were told that, that how much revenue is coming from each of the segment and how much profit you are generating. So sensitivity and scenario is that analysis is that you might be looking into the future and you might be doing the forecast and you might be trying to know that how the future would be looking like, or you might be going for a new project and you may have to like calculate that how the revenues would be growing in the future. So for that you could do the sensitivity and scenario analysis. Sensitivity analysis is different from scenario. We discussed that the sensitivity is analysis is just to know the impact of the changes of the one factor on your NPV. Like you are going to uh, enter a new business, for instance, that you are for the sake of for the sake of like example, and in case study they do give some type of the situation which otherwise in the real world are not possible. Like they might give you a situation that Cuppcar is going to acquire a manufacturer, or Cuppcar is going to enter into the car manufacturing business. So they might give you some information, and you, while you are evaluating the project, doing the project appraisal in order to know the risk hidden in that project, which is associated with the uh, each element, each assumption. Demand is an important assumption. While you evaluate any project, you know that we evaluate the project on the basis of the future cash flows. So while we are calculating the future cash flow, we take a lot of assumptions. And some of the time, the sum of the assumptions are very important, that the changes in those assumptions could change the results altogether. So you could see that, and you could like calculate it, and theoretically you should know it. You obviously would not be calculating you would not be doing the sensitivity analysis there. You need to know that how the changes in a one factor could have an impact on the bottom line of your business. Since the scenario is a group of assumptions which you might be changing, and you could see that how that would be having an impact on your business. So related assumptions like while I was teaching you, I told you this topic when I was teaching you, I told you that in a scenario, you might say that if the dollar will go up, the fuel price will go up, and when the prices will go up, demand will go down. So there is a scenario now. The fuel price, the exchange rate increases, fuel price increases, and demand decreases. So you would say that 5% exchange rate increase will bring an increase in the fuel prices by, let's suppose, 3%, and then the demand will go down by 2%. So this is a cluster of assumptions. So now you will put these all changes in your business model, in your financial model actually, and you will see that what is the bottom line and what is the NPV. So this is how you would be able to know that how robust your business is, like if your business is capable of uh, tolerating or absorbing the changes in the business environment. Uh, Here, the one important thing is I was looking that intangible assets. You know that you got a lot of intangible assets. These property, plant, and equipment are slightly increasing. You know that you could see that there is a small increase from in 2022 compared to 2021. Intangible assets are the same. So those intangible assets are probably those softwares and those the licenses, or your franchise or the dealership. Uh, you might have paid for it. That is also an intangible asset. The fee that you have paid, which might be refundable, right? At the time uh, you would be terminating the dealership. There might be a fee, security deposit type of a fee or there could be any other intangible asset. I don't know if those advance fee security deposits are which are paid for getting the dealership, you would be keeping them here or somewhere else in the accounts. So current assets, you got inventory. Uh, that's a huge number. Reason being that you are purchasing the car from the car manufacturer and then reselling it. Similarly, receivables are there. You are doing the business on the credit, and you will see that there are the trade payables as well. So your credit terms are good. You know, your receivables are less, your payables are more. It means that you are using the money of the manufacturers. You are holding their money, right? So the credit terms you are getting from the manufacturer are better than the terms that you are offering to the customers. Probably you are not offering these credit sales to the individual customer. It might be the uh,
मिशन
for
से
the corporate. Sorry.
अच्छा ये मैं कह रहा था कि ये जो आप ट्रेड रिसीवेबल्स एक पॉइंट तो आपने डिस्कस कर दिया कि अ, इसमें ये चांसेस तो बहुत कम है कि हम मतलब कब का क्रेडिट पे कोई सेल कर रहा हो तो ये रिसीवेबल्स वो हैं जो इन्होंने इनवाइसिंग की होगी मैन्युफैक्चरर को अदर सर्विसेज के लिए क्या ये वो चीज़ हो सकती है
ये वो भी हो सकता है, और ये आपका बिल्कुल आपने बहुत अच्छा पॉइंट किया है। ये वो भी हो सकता है, और आपका कॉर्पोरेट
मिशंस
कस्टमर्स
और
के साथ
बाकी
भी क्रेडिट
चीज़ें
कॉर्पोरेट कस्टमर्स के साथ भी हो सकता है। कॉर्पोरेट कस्टमर्स के साथ अक्सर ट्रेड क्रेडिट टर्म्स पे होता है,
लीजिंग
क्रेडिट पे
वाली
होता है।
ठीक
लीजिंग वाला ये वो भी हो सकता है, ठीक है।
ठीक
लेकिन
ठीक
इसको एक्सप्लिसिटली नहीं तो दे आपने ये अच्छा पॉइंट आया कि जो आप सर्विसेज प्रोवाइड करते हैं ऑन बिहाफ ऑफ द मैन्युफैक्चरर फॉर देयर वारंटीज, ये वो भी हो सकता है कि वो आपको 60 डेज में, 30 डेज में, कितने दिनों में पे करते हैं। लेकिन वन थिंग इज वेरी ऑब्वियस दैट the credit terms that you are getting from the manufacturer are better than the credit terms that you are extending to your customer or for your sales, right? So that the
सही
one thing is very clear. Uh, you got a lot of retained earnings sitting in your balance sheet. It means that your company is perhaps not paying all of its profits in dividends. You are holding back the dividends, so that's accumulating in shape of the retained earnings in your balance sheet. You do have the loans, as told you that your loans from the P&L, it was the same. So you could see that here that thing is evident, like financing cost is same. So Obviously, you have not raised any new loans. Now, the point here that needs to be understood is that you have a decent amount of the property, plant, and equipment. These are the fixed assets, and these assets, I'm sorry, this asset could be used for raising the loans. You know that when your company has the fixed assets, those could be used as a collateral, and you could raise the finances using those assets. So your asset base actually dictates that if your company would be going for to raise financing from a bank, you do have a good asset base, and you could offer those assets as a collateral to the financing institution. And dealerships, the assets would be like the land. They may have the ownership of the land. They might have the ownership of obviously the building infrastructure is their ownership, right? So this type of the things, and there might be some other equipments there, uh, the furniture fixture, etc., etc. Uh, that could be making the property, plant, and equipment for your dealership. But the point that needs to be understood from here is that this asset base actually give you a leverage to raise the finances from the financial institution, debt financing. It conducive for raising the debt financing. Intangible assets, I because there is a mention of the intangible assets, and you know that you might see a question where your IT department might be introducing an application of the cup card dealership. The application might be internally generated for your company. So there is a way that how you can recognize the intangible assets, that the intangible asset acquired from the third party, those are fine, like you could recognize it. But if the intangible assets are internally generated, then those needs to meet a certain criteria that has been mentioned here, that how you would be recognizing it. Again, I told you that these slides need to be adjusted, so I have not worked on these slides, but I thought that I will be briefly explaining to you. I will I will put the ratios here, and will share with you the revised presentation uh, by inserting some of the ratios related to the P&L and the balance sheet, right? Again, here the sale revenues increase of the Meltro's Meltro's motor is much more than your revenue increase in terms of the percentage. You would see that your revenue is increasing slightly, 4.4 billion to 4.6 billion, whereas their revenue, you would see that is increasing from 3.8 to 4.4. So almost it is 800 million, whereas in your case it is only 200 million, right? Around 200 million. So they are expanding. Your revenue is not increasing with that. Similarly, they are also holding their revenues, their profits, and you would see that they will be having a lot of uh, retained earnings here. So I'm gonna leave it this part. Financial reports, we will talk about it later. I will, that what we want to talk about is that I have already talked about that thing, but I will be sharing some ratios with you just for reference, that you could remember those ratios. That if you see a question where those ratios could be referred, generally that would be giving a good impression to the examiner. Now these news reports are important. So this news report, Welland Business Daily, it explains that electric car sales remain low in Welland. So you are currently selling the cars which are mechanical um, cars, not the electrical cars. So sale of the electric car remain depressed in Welland, with most motor. We have not been given the information if your company is selling electric cars or not. Uh, m- Apparently, it looks like you are not selling the electrical cars, because this news report says that electrical cars are not so common in Welland. So sale of electric car remained depressed in Welland, with most of motorists continuing to buy cars powered by internal combustion engine. These use petrol or diesel fuel. So electric cars have become increasingly popular in many other countries because they can be powered by electricity that is generated using renewable sources. These cars are generally powered by the batteries that can be recharged at charging points built into car owners' home or at public charging point. Now, this is a trigger actually. They might say that that now it's because in rest of the world the electric cars are quite common or famous. We need to introduce those cars in our country as well. The government might decide that in this part they have explained it. The reason is that uh, the mileage of the electrical vehicle is not so good and the charging points are also not available. So that's why that the people are not buying these cars. But that the government might put emphasis on these electrical vehicle for the reason of the environmental factors, for the environmental reasons, because these are considered as more environment friendly. And there is an assumption that the electricity which is being used to charge these cars is being generated through the renewable sources. We have done that one writing assignment where you know that what is renewable and what is the other sources of the electricity. So if the electricity is being produced from the renewable sources, then it is good. But if the electricity is being produced from the coal and the other the resources which generate the pollution, then perhaps just driving an electrical car which has been charged by an electricity which has been generated from the coal, you are not doing good to the environment. Actually, you are hurting the environment because it is just that shift of the the pollution from the one segment to the other. The cars stop emitting the pollution, but those electricity uh, manufacturer or the producers are generating that pollution. So it's not of any good for the country or for the environment. So then that based on it, if your country has a renewable sources of the energies, then they might introduce the electrical vehicle. They might encourage the government might encourage the electrical vehicle, and in that case, you might have to change your business model. You might have to introduce the dealerships which are which would be selling those electrical vehicles. So, the current manufacturer might start introducing the electrical vehicle, or the new manufacturer might be introducing the electrical vehicles. So, improvement in the network of the charging points and the improvement in the electricity range of the electric vehicle will change the demand of the type of the cars in Valiant. Cuppcar shall take the dealership from manufacturer producing EVs, electrical vehicles. If the current owners manufacturers are not producing the electrical vehicles, then you might have to see that who is producing manufacturing, so you could take it from them. Electrical vehicle are more environment friendly, and dealerships promoting it will get the positive reputation. You know that just imagine that a one dealership here in Pakistan, they are just selling Tesla. So everybody would be running to it. Although that's very expensive, Tesla car is very expensive, but just imagine that if it is in our range, we could buy it. And there is a slogan that the dealership is selling the cars which are environment friendly, and that you could drive it still, that you would not be hurting the environment because but then the point is that the electricity should also uh, be produced from the renewable sources. If it is being produced from the other sources, then probably it will not be helping and it will not be achieving the desired objectives. Then integrated reporting, because it involves the environment and the factors related to the non-financial performance of the company. So I have just given a brief introduction to the integrated reporting. Now, you know that most of the companies, they present their financial information and they don't present their non-financial information uh, in your annual report. You know that there might be a requirement that you will disclose that what type of the cars you are selling and what is the carbon emission rate of those cars. So if you are promoting the cars which are generating the pollution more than the other cars, it might be having a negative impact on your reputation. So integrated reporting requires that how you are treating the other resources. It is not about just the pollution factor. You might be how you are treating your employees, how you are doing the other, the doing the other corporate social responsibility things for your society. Corporate social responsibility is a one part of the integrated reporting. How you are treating the human capital, natural capital, social capital, that's important, right? So then a new news report, motoring column, don't overpay for the vehicle. This news actually says that when you would be going to the car dealership, they would be doing the diagnostic check and they would be charging you a lot of money. And on the context that they would say that they have paid for the softwares that they are using to do the diagnostic of your car. So cars are becoming increasingly complicated, which often make it difficult for motorists to identify fault in event of a breakdown. It used to be almost as difficult for mechanics to identify problems, meaning that the visits to the garage often involved lengthy diagnostic inspections charged for at the mechanic's hourly rate. Nowadays, even the most basic cars have electronic systems that can be read and interpreted by the devices that plug into a port under the dashboard. These devices are basically portable computer that run software that can interrogate the system in the car and can identify all sort of problem, both are electrical and mechanical, right? So the sensors built into the car's component can identify problem that would otherwise have required parts to be dismantled for diagnostic purpose. You must have done that. All of you must have gone through it that you go there, they will put a computer, they will say that in our country, they say that I will attach a computer and will see that. That is basically a software meant for that car and that will tell you that how you could identify the fault. That's quite effective actually. And many a times that it help you to identify the fault and you then the mechanic can rectify it. But many a times this diagnostic equipment, these diagnostic equipments, they fail to identify the problem. It happened with me numerous times that you take your car and they will put it and they will say that this is the problem. They will rectify it the next time the problem is there. So you know that this happens. So the same thing has been explained here. Always check repair bills and query any significant charges of diagnostic work, although garage may claim that they are passing on the cost of software that is expensive and require regular updating when new model of a car are introduced. So it has not been explained that whether that diagnostic softwares are being provided by the manufacturer free of cost. So if obviously they have bought that software and they are paying for its fee and the renewal fee, so obviously they would be transferring that cost also to the customer. So they would be charging for it. And one part of your total service bill might include charges that they are paying for that software. So one word of the caution that the same thing has been told that that these devices can detect any possible fault, but there is a limit to their capability. There are many serious problems that they could overlook, leaving the risk of breakdown or accident due to the malfunction. Mechanics still need to inspect parts and carry out the close inspections, right? So the cup car may offer the diagnostic service as a package of the maintenance work, right? So this could be one of the way to increase your demand by that because this is something we have been told that the customer feel that are they are sometime charged unfairly for the services. So you could make it a part of your package deal because you just want to encourage the customers to visit more frequently, visit your workshop or to refer the other customers to your workshop. All the equipment, including the diagnostic devices, shall be updated so the efficiency and accuracy could be improved. Wrong diagnostic may result. Now, so this type of a situation, you might be thinking that what type of the question would come from this type of information. This type of the situation might give a rise to a question where the examiner would be asking about a claim from a customer. The customer might claim or a reputational risk might arise because of it, right? Or what could be the other situation? We will see that in the mock exam if they give some question on it, because making a question from a situation, that's a difficult thing. You know that these are the exams are actually prepared by the expert people. They are so specialized in it. And by the way, as I told you that they do have a bank of the questions that they have asked in the past, and you know the same questions are asked in every exam with a little tweaking. So you, if you will read the question asked in 4 5 last exam, you will find a pattern in the question. The same, but again the question needs to be responded in accordance to the pre-scene. So that's why student cannot actually take advantage of getting that information. We all know that the same topics would be tested, but how they will test it, that would be that would be seen only in the exam. So wrong diagnostics may result in placing otherwise fine car part. You know that the car part is the component is working well, and because of your equipment, diagnostic equipment, you might end up like replacing a part which is otherwise fine. So that would be putting a financial burden on the customer. And if they find this out, that's going to create a reputational risk for your company, or that would be resulting into a claim from the customer. Then there is another news detail which tells watch the total cost when you specify your new car. Actually, this news tell us that when you are going to buy a new car, there are the variants of the car. They call it the trims. Then you know that the different trim levels of each model, like we call it the variants here, the basic model, and then there is the more um, a sophisticated model than the more, like in Kia Sportage, you do have the Alpha, you do have the forward wheel drive, front wheel drive, and then you do have the all wheel drive. So the prices of all the variants are different from each other. So they are just telling that when you are going to buy the car, you need to see that if you are paying the higher amount for top variant, are you really going to use all those the attributes of that car? So you need to keep this in mind while going to buy a car, that that how the price of the each variant is different. So product differentiation strategy is being used to cater for the requirement of the different segments of the market by introducing the various variants of the car here. They have told us that for the even for the some of the cars, the paint color actually creates the difference. You know that there are the certain models which are available. That the colors are not available in a certain model. Like some of the colors would be available only on the in the top variant of that car. So they are just saying that they are creating a different differentiation. So pricing strategy of the car is based on differentiation strategy. It is the differentiation, like they are creating a differentiation by introducing the more attributes in the car, and they are charging for it. And obviously, some of the variants would be more popular than the others. Then this column, this news extract tell us that motoring column, don't forget to have your car serviced regularly. New car come with the warranty that guarantees against the defects for the first 3 years, sometimes more. Those warranties can protect car owner against repair cost, but only if the car are serviced in accordance with the planned maintenance schedule set by the car manufacturer. So most car require an annual service, with the work undertaken at each service varying according to the age of the car. The first year service may require little more than an oil change and an inspection of some key component. The second year service may require rather more work because the car is older and at a greater risk of wear and tear. The third year may require slightly less work than second, depending on how the car has been driven, but there will be a different set of checks and replacements. Car manufacturers publish lists of items that are to be checked or replaced during each of the annual services, and amount of labor required for each check or replacement. The cost of service may vary from year to year because of this, but all franchised dealership should charge the same for For example, servicing a 2-year-old motor. So actually, what the idea is that they're telling us that there is a periodic service there which we already studied, and you need to take your car to the dealership in order to keep your warranty. And then they are telling us that the rates of that service are also same, which we discussed, that that when you would be doing the maintenance work covered under the warranty, or the services that you are doing covered under the warranty, you will be charging to the manufacturer under a predefined rate. So those, they are telling us that those rates are very well defined, but those are dependent on the man hour, the work hour, they are spending. So that could this is the point where that you could create a efficiency, that you might be spending the less labor hour on that work. So that would be giving an advantage not to the customer but to the manufacturer. Or you might be doing a standard labor hours, which are defined by the manufacturer. So you have a limited control on that aspect, because the rate is defined by the manufacturer. So if you wish to avoid fluctuating service cost, then you can buy a service plan at the time of the car's purchase that simplifies the cost of servicing by requiring either a single lump sum payment or 36 monthly installments. So for the services, warranties are for the specific parts, as I told you that, but this servicing is if you buy it for those periodic services, like we go for the oil change, brake service, etc., etc. So if you have bought that 3-year warranty, that's going to keep your risk at a minimum, at a certain level. You know that you have paid the money. Now you don't worry that how much you would be incurring. So buying car service plan helps the owner to manage the risk associated with fluctuation in maintenance cost. Revenue from such service plan will be recognized under revenue from contract. Again, if you are extending the services, if those uh, warranties are extended by the manufacturer, so you would just be charging uh, the you would just be charging and recognizing the revenue for the job that you have done. For that, you don't need to go for that revenue from contract concept if the warranty is not extended by your dealership. If the warranty is extended by your dealership, then you will do that. Okay, then don't afraid to buy X demonstrator. Here we have been told that at a dealership there are the cars. One is the demonstrator, and the other one they call it they have wrote it here. Let me courtesy cars. These are the cars, like the demonstrators are the cars which are displayed in the showroom or the car lot, and the courtesy car are the cars which are given to the customer whose car are under warranty, and those car have certain problem, so they have to leave it at the workshop. So they need a car in replacement. So there are the courtesy car which you would be giving to the customers under certain situation. So now those courtesy car are the new car, and the demonstrator are the good, the cars which are being just displayed. Most of the time they are telling us that the customers are not willing to buy those cars, so they have told us that you should not be worried to buy that car. These courtesy car would definitely be being sold uh, as a used car, right? So you know that before that they become too old to be sold as even the used car. So they are selling it as as a used car. So dealership, like here, car dealership often own a large number of cars. They buy car to use as demonstrative. Those are the cars that can be taken on test drive by potential customer under supervision by sales staff. Dealership also own the courtesy car that can be loaned to customer whose cars are in workshop for repair or a service. So two types of demonstrator
अच्छा,
only for. Yes, please.
जी, इसमें एक पॉइंट आ रहा है कि ये जो कर्टेसी कार्स हैं, क्या ये उन्हीं कस्टमर्स को दी जाएँगी जो कि अंडर वारंटी या जिनके साथ सर्विस कॉन्ट्रैक्ट होंगे, या जो अदर देन दैट भी होगा उसको भी देंगे ये? नॉर्मली
तो
मतलब
इसको
इसका क्या
एक्सप्लेन तो नहीं किया, यहाँ पे लिखा ही नहीं है इसका। तो अब दैट इट डिपेंड्स के क्या सिचुएशन है, आप दे रहे हैं तो इट माइट नॉट बी अ फ्री ऑफ चार्ज, यू माइट बी चार्जिंग
हुँ,
फॉर इट। But
सही,
they have not explained it. From
सही,
this information, we cannot understand, because in the real world they don't do that. In the real world,
ठीक,
nobody gives you their courtesy car. At least in our part of the world, when you
सही,
drop your car to the workshop, they don't give you the replacement car. right? So car buyers are often reluctant to buy former demonstrator or courtesy car because they are worried that they could have been driven carelessly and that they may have suffered excessive wear and tear, but that's rarely the case. Now, the problem here is that what would be the treatment of these cars? The courtesy cars and the demonstrator, you would be probably taking it as your operational asset. So I probably such cars are booked as asset of company. It is not inventory. It is you are using it in operational. You would say that you own this car and you are using this car, and then the revenue from the sale of such car will be taken to other comprehensive income because it become your asset. It is not your inventory, saleable inventory. It is something that you are using in your operation, and then you will be selling it. So it is not like you are selling it from your inventory, so you might take it to another comprehensive income. I don't know if that could be treated as a say revenue from the used car as well. So it could go to to the the income like you know that when you just imagine that if that car is being used for operational purposes, so the cost will be charged to your you know that you will be capitalizing it for for let's suppose that 5 year, and you would might be charging it to the balance sheet, the depreciation and other cost if you are incurring, and the operational cost when do you using it as a you there must be an operational cost as well when you are taking it out for the test drives, etc. So that would go to the P&L. This car is for the usage of the company, like to facilitate the customers. No, it is not a normal inventory. So when you sell it, maybe you will have to take it to the other comprehensive income, and you know that you would say that what is the carrying value of that car in your accounts, and what is the sale price, and you know that if there is a profit and loss, that could also be treated accordingly. This was coming just to my mind because this is no more your inventory if you are using it uh, in your business operations, right? So inventory is inventory is the are the cars which you bought from the seller, manufacturer. You are keeping it in inventory and you are selling it to the customer. Now these cars are more than inventory; those are being used to support your normal business functions in dealership. So there could be a different treatment of these cars, like you use any asset in your company. You don't take that income like your company is doing some business. So you bought a car, you are using that car. Now after 3 year or 2 year, you sell that car. So where would that revenue will go? It will not go in your company's revenue. It will go into the other comprehensive income because that is not your normal business. Okay, then there are the car sellers blogs. Here, these are interesting. Uh, I read the end of the month. Lots of customers have read online article telling them that they can negotiate a huge discount on a new car because dealership must hit their car manufacturer's monthly sales target and so will accept any price to make a sale. Sadly, the margin on new car is so small that it is rarely possible to offer more than free set of mats or nicer set of alloy rims, alloy wheels. Now they are telling us that you know that the customers also know that these dealerships are compelled to sell the cars to achieve their targets, and because they understand that they will be getting the incentive on to achieving those targets. So if we have had a good month, then we might even delay sales until the start of the following month to make it easier to hit that month's target. That is unethical. Now you know that that might ask you to right on from an ethical perspective, right? My favorite trick is to tell a customer that we are expecting a fresh delivery of new cars and that he or she will have a better choice in the week's time, so they are deceiving the customer. So never forget the car that car sale executive are evaluated on sales volume and on average gross profit per unit. It affect our bonus if we sell car at a loss, so we rarely do. So then they have comments on it. Uh, the things that annoys me most is when a sale executive pretends to go to the sales manager's office to seek permission to reduce the car's selling price. They are saying pretend, but we know that it is the real thing. You know that your sales manager has not delegated that power to the sales executive. That permission is never granted, and it feels as if the manager was never even consulted, right? Now, this is something which is the customer perception, right? So that's something that needs to be that might require the more transparent deal where maybe the sales manager might interact with such a customer directly, or they delegate the authority uh, to the executive, sales executive, and that they, as we have been told, that at the end of the day, the sales executive would be evaluated on the basis of their performance on the revenues and the profits, so they would not be selling the cars in loss. That then then the sales executive might advise or explain the customers that the what are the margins. Here, the customer have a impression that if they would be pressing the sales executive, they will get the discount. But the sales executives are telling that here that they cannot sell in losses. But we know that in order to achieve their targets, they can do that. They at a certain point they might sell the cars at a price which is not profitable, but that it will be adding to their targets, and that they might get the incentive. So I got a 500 discount when I negotiated hard for a deal on a new car. Discounts are possible, although they may be hard to get. So ethical consideration to holding current month sale to meet the target of next month. We need to understand that we have certain principle of ethics. So that the sales executive should comply with those ethics. Shouldn't the sales executive have authority to give the discount? This is my viewpoint that they should be delegated with certain limitations, obviously certain oversight function. Uh, Effective delegation, that they might ask you the concept related to the delegation of the authority. Again, you have done a assignment on it, so you know that what is the effective delegation and how you could effectively delegate the authority to the subordinates. Here, the ethical principles: integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. Here, probably the integrity is being compromised because the salesperson is not a member of, obviously, the chartered accountancy association, that the CIMA or any other association. But that overall we need to understand that the business should be run in a ethical manner. Effective delegation, again, the same thing has been explained here. There is another blog on the used car. Um, I sell new cars, but I wish I could sell used car instead. It is easier to negotiate sale. This is now the probably the sales guy is saying it is easier to negotiate the sale on the used car because no two used cars are the same. With used car, sale executive have a scope of adjust selling prices and the prices that they will offer on customer old car that will be taken as a trade-in. For example, a sale executive can happily offer a customer a $1,000 discount on the selling price of used car because the trade-in value of the customer's existing car can be reduced by $1,000, right? So that the used cars are required as an exchange for the sale of the used car as well. You got the inventory of the used car, so you accept a used car in sale of used car, and that for the sale of the used car. Another trick of the trade is to offer used car a high selling price, which means that we can offer every potential customer a really high trade-in for their existing cars. So again, that it's not because for the used car, not no, as it has been explained that no used cars are two used car are the same. So you could always say that that this car has this uh, quality, and that this is better in terms of the condition, etc., etc. So you got a margin, but in the new car you don't have. So that's the truth. So, but you know that your company is famous for being maintaining a quality. So you are keeping your promise and you are not miscommitting with the customer. So the motor trade shares data on the selling prices of used car, taking account of make, model, mileage, and condition. That is data is available. But valuing a used car requires a lot of experience. For example, classifying cars bodywork as a good average. Again, as I told you that this inspection report service has been given by the park wheels. So you know that even with the same inspection report for the same model of the car, the price would be different depending on that who is selling, who is buying. So there are a lot of variables in the sale and purchase of the used cars. A lot of potential for generating the profit or even incurring the losses as well. So selling new car is complicated by the fact that every car of the particular model is mass produced and identical. Car manufacturers set recommended selling price, which are published online. Dealerships rarely offer discount on new car, although there may be rare occasion when we sell new cars cheaply to get rid of a backlog of inventory, or because we are really struggling to hit car manufacturer sales target. Now, here in these blogs, the information is being given in a little bit contradiction to the information that we have already studied. In new car sales, we have been told that the customer, your sales executive are offering the discount to the customer. Reason is that they want to promote the sale, and that sometimes they would be selling a new car at a loss because they would be getting the business from the other services. But here they are saying that they rarely sell the new car at a price less than the price that has been recommended by the manufacturer. So that needs to be seen, that why there is a contradiction, and that in exam situation they might give some question on it related to it. But apparently it looks like the information given in these blogs is different from the information that we have studied. And another factor is that the margins on the new cars are so small that even if you are giving the discount to the customer, they are not taking it as a discount, or they are not considering that they are getting any significant discount. So although there may be rare occasion when we sell new car cheaply to get rid of backlog inventory, or because we are really struggling to hit a car manufacturer sale target. We cannot inflate the selling price of a new car to compensate if we pay more for a customer's trade-in than the car is actually worth. Like the used car worth 6,000, so you cannot offer 7,000 just to sell your new car, because you don't have the margin to increase the price of your new car. Whereas if you are doing the trade-in for a used car, so you could put $1,000 more for the car that you are getting from the customer, but at the same time you could increase the price of the used car that you are selling to your customer. So there you got the liberty, but in the new cars you don't have that liberty. So if we overpay for a trade-in against the price of a new car, then we will probably have to sell the trade-in at loss later on. You would be selling, if you have bought it expensive, then you won't be able to sell it in the market, and you will be selling it at a loss actually. So still everybody loves to buy shiny new car, and I'm very good at making people fall in love with the cars in my showroom. So I feel sorry for you, Joe. You know that there is a comment, and then I love it when you guys are forced to sell cars at loss. I got a great deal on a Co-Power Speedster when they launched the Speedster Mark II. Co-Power dealership were almost giving the old Mac 1 Mark 1 away. They're just saying that that again, that he got a new car at a cheaper price. So offering and buying used car along with new car dealerships gives advantage to enhance sales through margins in used car. So if you are buying a used car by selling a new car as a trade-in, and you are getting it on a good price, then obviously you are getting a benefit because you will make a money on the used car as well. But if you are getting it a higher price, not a good price, then it's going to give a loss to you. There is a more risk involved in sale of used car, as selling price may vary significantly. Okay, then another blog, and then that's it. So the other blog says that friends and rivals. I hope it isn't obvious, but there is a lot of rivalry within car dealership. Each department has to make a profit. This is something that I was telling you, that there would be a conflict, and they could test the concept of the conflict resolution, etc. that they how you would be managing the conflicting expectation of the stakeholder within the company. So each department has to make a profit, and most of the staff who deal directly with the customer are evaluated and rewarded on the basis of the sales and the gross profit. This often leads to staff focusing on their own interest rather than that of the dealership as a whole. For example, if I sell only new car, and so I would never advise potential customer to buy a used car instead, even if the dealership principal had told us that we are carrying too many used car inventory and selling them should be the priority for a while. Why? Because that when the used car is sold, the incentive will be taken by that team, and you are a different team. So they are telling that there is no goal congruence. They are not working as a team. So I have given an idea that you could create a bonus which is dependent on the performance of the overall performance of the company. Along with the individual performance bonuses, you could create a bonus scheme which is based on the overall performance of the company. So we have a similar problem in dealings between car sales and the workshop. Car sales executive often argue that the workshop should charge only for the cost of parts when cars are prepared for sale, while the workshop argue that the parts and so the transfer pricing is going to be there. I can see it like this is so obvious in a one of the variant. You're gonna see the transfer pricing and responsibility center and these performance related issues. This topic would be tested, and we will see that in the mock they will explain it. Labor should be charged at a full commercial rates, right? So every car dealership that I have ever worked for has had a monthly meeting for department heads. Those meetings almost always result in arguments. That there's a problem, that there is a conflict, and you could see that how that could be resolved in a given situation. Obviously their targets are such that they are not in aligned with each other. So you might have to introduce a performance management system which takes into account the performance of the dealership as a whole and give it a weightage, and that weightage is quite significant. That then only then those all the department would start to work with the collaboration. They would start to work in collaboration with each other. I bought a used car once. I have been promised that it should be checked and serviced by the dealership workshop before I took delivery. Uh, the car broke down before I had even reached my home. I complained to the sales executive and was told that workshop always gives priority to paid servicing and repair rather than preparing cars for sale. That this is about the used car. You give a guarantee of 7 days. So so this again is something wrong with the performance. That the responsibility center concept, the performance evaluation that needs to be rectified. We will see there would must be a question in the mock, in one of the mock where you will get this situation, because this is too obvious that the departments have a great conflict with each other in terms of collaborating and supporting the organizational goal instead of just promoting their interest of their own department. Besides that, I have just explained some of the concept, joint arrangement, this expansion strategies. You could read it like we have already done it, like key risks of your company, right? And then the stress testing for the Cuppcar's business model. You could have a look at it. These are the additional things which I thought like I might give you a little bit introduction, especially this stress testing. You need to read it very carefully. This is important that how robust your business model is, and that would be coming from the stress testing. And beside that, there is that's it. Like from the pre-scene analysis, it is a lengthy, the obviously the analysis and requires a lot of energy to remain focused. But now, at least your company, that what are the problems within the company, the business model of your company, the cash revenue streams of your company, the cost structure, human resource structure, financial structure, capital structure of your company, organization structure of your company, that the competition, etc., etc. So that this would be giving you a benefit while you would be writing answer. So from this class onward we will let me stop recording first. इसके बाद अब हम प्रैक्टिस पे